Are you curious in the most recent developments regarding Tesla and its standing in the electric vehicle market? In this video, we'll go over a number of amazing stories that will make even the greatest as investors debate whether Tesla stock is a good buy. We'll take a closer look at why Tesla enthusiasts remain bullish on the company's future. Before we get further into this video, let me first ask you all to subscribe to our channel and don't forget to give this video a big thumbs up. Let's get started, shall we? Tesla, they're a full-blown bull. They're ready to dive head on into the company's recent price cuts on its Model S and Model X. The company's plans to reduce the cost of its next generation of vehicles and the impact this has on its competitors. Despite a difficult few months and an unsatisfactory investor day in early March, many were hoping for a big reveal of something unexpected, and as a result, Tesla shares are down about 1% as the company lowers prices for the Model S and a Model X for the second time this year. It looks like Tesla has better news now, with the firm restating its goal of 20 million deliveries by 2023, which would give it a 24% market share. The positives from Investor Day may have made many bullish. This revelation has thrilled Tesla fans and stockholders. According to a recent Wall Street Journal article, Elon Musk's cost-cutting goals at Tesla are putting pressure on the company's electric vehicle. Competitors in light of this GM concerns have been raised over Ford and Volkswagen's attempts to reduce the price of upcoming vehicles. Tesla CEO Elon Musk and other executives have stated that the company intends to use innovative manufacturing techniques in smaller factories to cut the cost of its next generation of vehicles in half. With these changes, the price of a new generation of vehicles could be as low as $25,000 or less. The next generation of vehicles, which many investors were anticipating to see, will not be exhibited until a formal product presentation. Although Tesla has not yet produced a $25,000 vehicle, the business has gradually reduced its production costs, resulting in thousands of dollars being taken off the price of various vehicles, although conventional automakers like Ford and General Motors have recently made millions of dollars on electrification investments. Investors doubt they will be able to match Tesla's profitability and cost effectiveness. Elon Musk, the CEO of Tesla, seems to have a natural capacity to put himself and the entire industry under strain by making incredibly ambitious promises. However, he is aware that even if he only meets half of his goals, it will still significantly alter the market and provide him a significant competitive edge. Recently, Moody's Investor Services gave Tesla a 3 rating with a stable outlook. This upgrading indicates Moody's anticipation that Tesla would continue to be one of the leading producers of battery electric vehicles with a growing global footprint and extremely high profitability. The update also takes governance factors into account, such as Tesla's responsible financial practices and management's proven operational track record, especially since the Model 3 entered the electric vehicle market in 2017. Tesla has experienced substantial growth. In an annual compliance report filed with the SEC in January, Tesla reported that the number of employees at its Texas Gigafactory tripled in 2022 compared to the previous year. This increase in headcount was part of a larger trend of employee headcount growth across all Tesla locations, which grew by 23%. Despite a trend of layoffs in the tech sector, Tesla had a substantial increase of 28,565 full-time employees from the previous year. Tesla has been busy ramping up production in its gigafactories worldwide, starting with the establishment of a factory in Shanghai and the release of the Model I. It is anticipated to deliver the Cybertruck and has begun building the Semi. This year, with the proposed construction of a gigafactory in Mexico, Tesla is expected to increase its global footprint once more in terms of ratings. Tesla is categorized as an investment-grade company by Moody's with a 3 rating. Given that Tesla has a 3 rating, which places it in the long-term investment-grade category, Moody's considers that its credit risks are mild. In the generic rating category, Tesla's modifier 3 rating is at the bottom, with its Model S, Model X, Model 3, and Model I vehicles. Tesla competes in the luxury car and crossover SUV categories. It is a prominent competitor in the battery electric vehicle market and is acknowledged as a leader in the EV business. The company allocates approximately forwarded its sales towards research development in order to enhance its industry-leading technology and lower production costs. While investors are intrigued by Tesla's potential for growth as more people adopt EVs due to increased demand, Tesla plans to sell new cars over the next few years, including a sports car, light truck, semi-truck, and affordable sedan and SUV. As we all know, Tesla has established itself as a leading producer of electric vehicles in the world, with production and gigafactories in Shanghai, Berlin, and Texas. The company opened 2 new factories in 2022. The business has also started manufacturing the Semi, and this year, the Cybertruck is anticipated to be delivered. The proposed Gigafactory in Mexico is projected to contribute to the growth of Tesla's global presence. Given that the company is classified as a long-term investment grade issuer, Moody's Ba3 rating suggests that the company has moderate credit risks. Given that conventional manufacturers are starting to invest significantly in EV development, investors are discussing whether or not Tesla stock is a viable investment. Despite these worries, Tesla may face more competition in the market. The company's EVs, autonomous vehicle batteries, and solar generation systems, according to Tesla enthusiasts, have the potential to upend the automotive and power generation industries. When combined with S unique supercharger network and cutting-edge technology, Tesla offers the best function sector of any EV available on the market. Currently, Tesla stock is trading at a price-to-earnings multiple of 55, which is historically inexpensive for the company, but may be viewed as pricey. With a 32% return on equity and 30% increase in revenue, investors are paying for quality. Tesla recently announced that certain of its models will now be priced lower, particularly in the Chinese market, demonstrating the company's ability to adapt to growing competition. Long-term investors who purchase Tesla stock now should see rewards as the business increases production, keeps its position as the industry leader, and the expanding EV market. Notable was Tesla's profitability for the entire year 2022, as the company's operational income doubled to $13.07 billion. This indicates that Tesla has greater opportunity to maintain cheap prices, grow its market share, and become less dependent on outside funding. Despite having a higher forward price to earnings ratio of 48 than its traditional rivals, Tesla's market capitalization of $623 places it ahead of all other American automakers combined. This is still acceptable given Tesla's potential for development as a pure play electric automaker. The management of Tesla anticipates that over time, vehicle deliveries will grow at a compound annual growth rate of 50, which could result in significant increases in revenue and profit. Although the price of Tesla stock has increased since the beginning of 2023, the company still seems like a good investment for long-term investors. While some analysts speculate that investors may have missed their opportunity to purchase the stock at a lower valuation, despite increased competition in the electric vehicle market, many analysts still think that Tesla remains the global leader in EVs thanks to its vertical integration, which drives higher margins and self-driving technology. A long-term investment strategy is essential for sustainable returns in the stock market. Although dynamic pricing may make growth generally unstable, analysts from Bush, Mizuho, RBC Capital Markets, and Jefferies all kept their buy ratings on Tesla stock and raised their price targets, which range from $200 to $200. Constant product upgrades should keep the Model 3 not growing across traditional segments. That pretty much wraps up our news about Tesla. We hope it was helpful. If it was, please make sure to give this video a thumbs up and remember to subscribe. We appreciate your time, and we'll see you in the next video. Tesla's profitability and growth expectations, along with its unique position in the electric vehicle market, justify its valuation. However, some argue that the company may have missed its window of opportunity. For compelling valuation, long-term investors may still be rewarded for buying Tesla stock.